Welcome to the DebtCircle Key Roundup. I am Vijendra. Today, we have some exciting developments in the financial world to discuss. We start with Pinegap, which has successfully raised $8 million in Series A funding, a significant boost for the company. On the currency front, the rupee opened marginally stronger at 95.17 against the US dollar, showing some resilience in the forex markets.
I'm Leela, and there's a lot happening with the Securities and Exchange Board of India, or SEBI. They are planning a major revamp of the securities lending and borrowing framework to better align with global standards and improve market integration. Plus, SEBI is piloting the tokenization of corporate bonds using distributed ledger technology, aimed at enhancing settlement efficiency and increasing transparency. They are also focusing on deepening markets like cash equities and commodity derivatives, addressing new risks from quantum computing, and leveraging artificial intelligence for fraud detection and governance. Stay tuned as we dive deeper into all of this.
Let's start with Pinegap. They raised 8 million US dollars in Series A funding to expand their AI-driven equity research platform internationally, focusing on the US market.
That capital will boost FineGap's sales, engineering, and analyst teams, enhancing tailored AI research workflows for over 100 institutional clients.
Meanwhile, the Indian rupee declined by 8 paise to 95.25 against the US dollar due to a stronger dollar and rising crude prices. But foreign institutional investors bought shares worth rupees 480 crore, and forex reserves rose by 10.5 billion US dollars, limiting rupee depreciation.
On the regulatory side, SEBI will overhaul securities lending and borrowing to align with global standards, enhancing price discovery and better integrating cash and derivatives markets by 2026 to 27. This update should improve market efficiency and liquidity, making Indian securities markets more competitive globally and benefiting investors through smoother transactions.
In banking, news asset reconstruction companies purchased rupees 26,304 crore of bad loans in Q1 FY25, a 56% increase year on year. Despite improved bank asset quality, this rise reflects ongoing resolution of legacy stressed assets and evolving cash-heavy transaction structures.
On the corporate debt front, Steel Exchange India paid 15,351,042 rupees interest on secured NCDs, maintaining timely payments on August 7, 2026, a sign of strong financial discipline and reinforced investor confidence.
Here's an interesting one. RBI's 2022 rule requires funds sent abroad under LRS to be deployed within 180 days, causing offshore banks to limit international credit cards for Indians. This especially affects minors, as banks withdraw cards due to their limited ability to meet deployment and consent criteria.
NSE clearing fined Share India Securities 1,18,000 Indian rupees for a market-wide position limit breach with no material financial impact. Prompt disclosure shows strong compliance and the penalty is negligible relative to the company's overall market performance and operations.
Big numbers from SBI. Net profit rose 10.2% to 211.21 billion rupees in Q1, driven by 18.63% loan growth. Strong loan growth boosted margins despite rising slippages. Asset quality improved with gross NPAs falling to 1.47%.
And in microfinance, Muthoot Microfin and Satin Credit Care raised growth forecasts to 20 to 25% due to banks cutting microfinance lending. Larger NBFC-MFIs are filling the funding gap left by smaller lenders, consolidating their market share rapidly.
Bond markets had a good week too. Indian government bonds gained, with the 2036 bond yield falling to 6.7651%, aided by the RBI's dovish stance. The unchanged repo rate and lower inflation forecasts signal no rate hike soon, supporting bond market stability.
ICICI Bank and Axis Bank will each raise $300 million through 5-year bonds at about 5.35% coupon, closing next week. Both banks leverage the Reserve Bank of India's hedging facility, lowering borrowing costs with a fixed 1.5% per annum rate.
On the global front, Nielsen will acquire Double Verify for 2.15 billion US dollars in cash, aiming for a $4 billion media intelligence platform by 2027. This deal boosts Nielsen's analytics with Double Verify's digital verification, expanding services across TV, social, mobile, and AI-driven advertising workflows.
Back home, the Lok Sabha passed a bill enabling banks to charge fees on UPI transactions, removing the previous ban under the Payment and Settlement Systems Act. This allows merchant discount rate fees on UPI, funding payment infrastructure without charging end users, decided by the National Payments Corporation of India.
Punjab National Bank plans to launch wealth management services by third quarter 2026 to boost non-interest income and customer engagement. This complements their credit card growth strategy, aiming to increase profitability beyond 20,000 crore rupees net profit this year.
HUDCO's loan book is set to cross 2 lakh crore rupees in fiscal year 27, up from 1.62 lakh crore rupees last year. That signifies strong demand and infrastructure growth, with HUDCO planning 75,000 crore rupees borrowings to support this expansion.
In regulatory news, the Reserve Bank of India rejected Religare Enterprises' demerger plan, causing a 9.5% share price drop on August 6, 2026. This delays Religare's restructuring, highlighting significant regulatory hurdles despite prior shareholder and exchange approvals.
SEBI will start a closing auction session for futures and options stocks from August 3, 2026, aiming to stabilize closing prices. Low initial participation might cause short-term volatility, but it should improve price discovery over time.
On taxation, dividends from SPVs to REIT and InvIT investors are now tax-free under any tax regime, but SPVs in the new regime face a 25% surcharge. This encourages SPVs to weigh the higher surcharge against tax-free dividends when deciding between old and new tax regimes.
RBI proposes NBFCs restrict revolving credit to credit card issuers, requiring fixed amortization schedules and ending flexi loan replenishments. This may raise borrowing costs and reduce flexibility, but NBFCs could adapt with alternative products like gold loans.
Standard Chartered got in principle approval from IFSCA to distribute capital market products at Gift City, expanding wealth management services in India. This lets them offer signature chief investment office funds locally, tapping growing demand for global investment and expert advisory in Indian rupees.
A few bond updates Kodin. Fusion Finance sets August 14, 2026 as record date for monthly interest on secured NCDs at 10.95%, with bondholders needing to hold ISI NINE 139R07456 by that date to receive the 1 crore 39 lakh interest. Lloyds Metals and Energy allotted 700 crore rupees in secured NCDs at 9.02% coupon for 10 years, rated AA stable and backed by plant assets, ensuring low credit risk over the decade.
SK Finance will raise 5 billion Indian rupees via a 3-year bond, offering 9.10% coupon, rated AA minus, an attractive option for medium-term investors seeking fixed income in India. SMC Global Securities redeemed 33.51 crore rupees of 10% NCDs fully on August 7, 2026, improving leverage and freeing borrowing capacity. And Muffin Green Finance allotted rupees 50 crore in secured NCDs at 11% annual coupon, maturing in 15 months with monthly interest payments, appealing to income-focused investors seeking short-term fixed returns.
NBFC gold loans jumped by 69.3% to 3,41,000 crore rupees in June 2026, beating overall retail loan growth despite RBI's tighter regulations. And India's 6.94% government bond yield for 2036 is expected between 6.75 and 6.79% this week, as markets await India's and United States inflation data.
Rounding out today's numbers, Power Grid's consolidated net profit fell 0.9% to rupees 3,598 crore in Q1 FY27, though improved EBITDA margin to 82.8% shows operational efficiency gains. And Consent, AI raised Indian rupees 22 crores in Series A to expand globally and enhance AI fraud detection in insurance and healthcare, accelerating their AI research and improving claims processing efficiency across sectors. That's all for today's episode. Thanks for tuning in to the DebtCircle Key Round Up.